Hello everyone and welcome back for my final daily report market analysis video with me, Richard Poe, market analyst at Hantec on Monday the 2nd of March. Well, we've seen this massive sell-off actually on gold. Just showing on the hourly chart initially because we saw the market just initially rolling over on Friday, and then as the US markets came in, as the equity markets in the US opened, we saw a massive sell-off on gold. Now that, again, to me, would suggest that there was liquidation through equity positions and subsequently margin calls, and essentially at that point you see traders and portfolio managers having to close anything that they've got, and then subsequently gold gets hit on the back of that. Because conventionally you would not think that gold would be falling in this market. Massive market fear, VIX volatility through the roof, bond yields plummeting, that would add up to gold positions being used as a safe haven. However, we've seen on Friday that that was not the case, but there's been a recovery, as you can see, into today's session. And actually the recovery from Friday's low, which was 1565, has actually been 40 odd bucks. So already we've seen a sizable recovery actually from Friday's low. Now 1611 was that old breakout. That is a key level to now watch, because if you see the market closing back above that, it would really suggest that the recovery is sort of gaining traction again, because essentially you've still got this uptrend that is intact. You haven't yet really closed below this uptrend, so you'd still say that uptrend is intact. Yes, it was intraday breached on Friday, but not into the close, and certainly holding on today. If the market can continue to hang on to that support and rebuild above 1611 in the coming days, it would suggest that the bulls are getting their act together once more. That RSI around the 50 mark is interesting. That was where, around about that point where the February low was hit, although obviously we didn't have the magnitude of this of the corrective move, and actually we've now done a Fibonacci retracement of 50% of the bull run from the 1445 low measured up to 1688. 50% of that on a Fibonacci basis is 1566, so pretty much to the tick of that corrective move. We've seen that 50% retracement and rallied off that. We're now above 38.2% fib. So 1595 is a key level to keep an eye on now, because that is the 38.2% fib. So holding above that, you then reopen the 23.6% level again, 1631. And if you get a decisive rally through 38.2% fib, then certainly that 23.6% level comes back into play. So we have seen the market re-engaging in a bit of a recovery play. Now, obviously on the hourly chart, there's still the prospect that this is just a knee-jerk unwinding move. 48 on the hourly RSI. So still just unwinding that move really. Around that 50 mark is interesting, because previously that's where through the selling phases, or the sell-off in the last week or so, that is where the market has struggled. MACD lines around about that neutral point. So once again, it's sort of at a level that this is a turning point, and I think 1611 could be that sort of gauge and that watershed moment in the recovery. If you can break through 1611, which is that old high, then you can really see the market pushing higher. But 1610.50 today's high, so certainly looks as though 1611 is being looked at as a key gauge again. So a really interesting moment for gold, but as I said, I think Friday's sell-off was purely on a liquidation margin call basis, and subsequently when the market settles down, I can see gold being used as this weakness being used as a buying opportunity for gold, because ultimately we see pretty constructive long-term or medium to long-term outlook still for gold. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.